Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is the first Thursday of September. Welcome, another Thursday. Like this, they go by. Welcome, everyone. Oliver, hello. Justine, hello. Franklin, Nestor, NY Jets. Hey, NY Jets, haven't seen in a while. Let's read some comments. Justine, if Trump loses the election, the market and the country are in big trouble, no doubt. Franklin, let's roll. You got it, brother. Hey, Bob, good call on SQQQ. Thank you. You don't eat your words, man. You live to play another day, that's all. Hey, Bob, it's strange when this has been an anticipated event, and yet when it finally happens, we're all in a bit of shock. Yeah, it's strange, right? The market sends us signals, and sometimes we just don't react. Denny, hello. RL, hello. Gary, Amerimigo. Hey, champ. Welcome, everybody. I want to begin. I'm fortunate. I'm a very, very fortunate person. I started the Contrarian Trader in RL. We'll go to whether or not we're going to see a reversal tomorrow. In a little bit, we'll go over the day's events, and we'll talk about how we could have seen them coming, and we'll go over the weekly charts, and we'll talk about it a bit. But I want to begin with something I've been putting off for a couple of weeks now, and it hasn't been intentional at all. But I wanted to do it the right way. And a gentleman who's a frequent, hey, Kat, a frequent viewer, and he may even be on right now, Larry, if you're on, please say hello. Was good enough to send me a box. And in that box were two T-shirts. I'm wearing one of them right now. If you can't see it, chairman of the big board. And this here, I don't know if I was able to show it on the camera, but it says, the stock seer of the city, Robert, in air quotes, the Candlestick Desmond. And he wrote me this letter, and I'm going to read it off really quick as people still populate in. You can make your glasses on here. Bob, seer means, S-E-E-R, means someone who has supernatural insight to see what the future holds. As I've said, your breakdown of stocks and the market goes beyond traditional technical analysis. Clearly, you're an intuitive trader as well. Thank you for your help each day. And he goes on to make a comment about a gentleman I know, Henry Weingarten, in the city. But this is from Larry out of Louisville, Kentucky. Very heartfelt. Thank you, Larry, very much. I've met a lot of great people since I started this business in 2005. And it's very touching. Some give me deer meat. Others just send letters and great emails, and this one I got T-shirts. So thank you very much. I really appreciate it. Okay, that being said, let's talk about the markets a bit. Last night, Jake from TrendSpider sent out a tweet, and this is not last night, actually yesterday afternoon around 3:30. What if VIX climbing the market is just fueling a big drop in the VIX and melt up in the SPY? And I think he was teasing the crowd for a lot of replies, which he did get. And here was my response. I have seen many times before, and it normally does not end well for stocks. That was yesterday evening. So what does that mean? What it all means, and this we knew this was coming. We knew it was coming. The market's been telling us this is our third week that we were going to get a sell-off. When might that occur? We're not that smart. We just know that it's imminent. And when you take a look at the VIX, remember the S&P 500 has been up for the past 3 weeks, and the past 2 of those weeks, we have been up. Excuse me, I'm sorry, wrong chart. I thought it was 3. Yes, 3 weeks, sorry. Wrong chart. For the past 3 weeks, the VIX has been up while the S&P 500 has been up. We've been talking about this. I went over it late last week. I went over it on the week ahead commentary. We were watching this and we went short last week. We added more yesterday because this wasn't going to end well. And if you take a look, if you're wondering, what's the correlation between the VIX and the S&P 500? For those who are not familiar, it's pretty much completely inverse. All right, S&P 500 monthly chart. Here's the correlation. Normally the two do not trade in tandem. But of late, they have. Here you can see the correlation rising well above the neutral level, and this is the outcome. We've seen this before. We saw it just before the big crash back in March. And I was on an interview with TrendSpider back then, and everybody, it was a very bullish time, and I said, you got to be careful. I'm not feeling good about this market, and in fact, we're looking to short it. And that was back here. You saw right here the VIX rise along with the S&P 500. This is a 4-hour chart. And then we rolled over. So this does not end well. Am I predicting a sell-off like this? No. That's the difference this time. We need to keep in mind that what we're dealing with here is not a normal market. Right? This is a market that is being fueled by the Treasury and by the Federal Reserve. And we have an election coming up. And the powers that be will not allow this market to tank as it did back here. If they have to buy the entire stock market, they'll do it. Remember, the Federal Reserve is already authorized to buy corporate debt. So in a blink of an eye, they could be in there buying ETFs. So do I think that we are going to go straight down? No. Do I know whether or not we're going to have a reversal tomorrow, which is what RL asked a bit earlier? That's a tough one. That's a real tough one. I think that in all probability, given the fact that we did bounce off the lows of the day, I think that we're probably we could quite very well rally tomorrow morning, but I would not chase that rally. He had a nice outside reversal bar, good rally into the close, a lot of resistance up at 347 on the spiders. If they gap it up above that mark, they hold it. Well, then expect another run at the highs in the coming days and weeks. But I don't believe that it's going to be the names that have led the charge higher that are going to lead the way this time. Why? Simple technicals. I mean, we've been talking about Microsoft's chart for quite some time now. Now, Microsoft was down 6.19% on the day today. The key to remember about Microsoft is that while it looks like the froth has come off here, if you take a look at it on a monthly chart, we're still on a monthly basis 80.95. Let's pull back. It gets better. Quarterly chart, one more month left in the quarter. RSI 92.71. It gets better. Yearly chart. RSI 93.68. And we're leaning in, even after today's sell-off, leaning into the third standard deviation Bollinger Band for the fourth year in a row. This is not going to end well. It's going to end very, very poorly. Just as I predicted was going to happen when Tesla announced the split, I said, I saw this back during, just prior to the 2000 crash, the dot-com crash. Dell Computer was the name that sticks in the back of my mind constantly. They announced horrible earnings. They announced a stock split. The stock rallied, but never saw those highs again. And sure enough, what happened on Monday, right? Was that 31st Monday? Yeah, 31st was Monday. We gapped it up, and now we are down below the Monday lows. Apple, same gimmick, and I believe these to be all gimmicks, these splits. They got all the folks over at Webull and the other app all excited, buying up the shares, fractional shares, and look at us now. Here is the 31st, the split. We're way down below it. The game is up. I don't think that Apple or Tesla, and these are bold statements, I do not think that they're going to lead the charge, and I doubt they're going to make new highs prior to the election, while I do believe that the Dow Jones Industrial Average will make new all-time highs prior to the election. I'm making that call. Why? I think it's going to be the old names that lead the way. Did you know that today the airlines were up? Think about that. The airlines were up. Transports were down. Airlines up. Carnival Cruise Lines was up over 5% on the day. Of late, we've seen the banks rally. They didn't rally today. They pulled back today, but they did put in a new high today on yields that were declining. Could you imagine if yields were rallying, what the banks would be doing right now? What else? The utilities, XLU. Bad day today, but they broke out yesterday. These are the names that you're beginning to see strengthen as tech begins to pull back. Take a look at the XLK. Look at how overbought we were. This is a short waiting to happen. And I mentioned last night, this is the reason why we added to our short position of the Qs yesterday, was this formation here. Many times people confuse this hammer formation with being a bullish candlestick. It is not. It is a sign of indecision, because while we closed very, very strong on a volatile day, up on the day, we didn't close at the highs of the day. It just couldn't make the cut. It just couldn't do it. And it's a harbinger of bad news. It's not as clear of a sign of indecision as is a doji star formation or as is a large filled candlestick, but it's close enough for government work. And we went short even further because we had RSI at around, 91 and change yesterday. We had RSI on the XLK. Remember, the trip Qs are heavily weighted towards technology, above 92. We have Microsoft, RSI ridiculous. We had Tesla fading, Apple fading. It seemed like the smart decision to make. Did we go bailing on our banks and our utility trades today? No. Did I go adding? No. Not ready yet. Soon. Gold stocks took it on the chin, but rallied off the lows of the day. Did we go bailing? No. I still think there's more fuel in the tank for those names. Let's go to some comments. RL, Tesla's down another 16 points. It's probably going a lot lower than that, brother. Tommy, I see VIX strong, bullish last time you saw him. You chart, break channels. Yep. Gary, decided to watch you live for a change. Thanks for your service. You're very welcome, Gary. Thank you. Tommy, some people buy VIX before it spikes 20% yesterday. Yeah, I was even asked about that by one of the viewers, whether or not to buy the VIX. One of the leveraged ETFs. So, yeah, a lot of people were eyeballing it. HD, goodbye on the big dip. Probably. We'll go to that. That's an interesting play. I like it. TA, hey, TA, hello. Oliver, brother man, hello to you too. What else do we have? BA, very interesting. Not a good day today. I was very disappointed. I had an alert that fired off, Cat. Fed algos turned off today, and the market sold off momentum, stop limit orders. Yeah, and that's the concern. If we see a continuation breakdown tomorrow, we'll get through the weekend where people will postpone having to cover those calls. But come Monday, if we see a continuation sell-off in the market, then you're going to see some forced liquidations. Tommy, what went wrong with the banks? What banks went up? I'm not sure. I haven't looked. Facebook, is this Facebook done? Not quite yet. We could be. You're seeing a lot of topping action on Facebook. I wouldn't rule out higher highs just yet. Lower highs, an ultimate oscillator, but no biggie. Stokes very extended. I wouldn't rule it out yet. All right, let's go to, regional banks are up today. Yes, good point, Nestor. Regional banks are up. If you take a look at the DPST, excellent point. This is a weekly chart, daily chart. Up a little over a third of a percentage point. They faded on the day. They were a lot higher. SPC, I was looking at earlier today. That's Virgin Galactic. I think that Virgin has a way to go lower. I would avoid Virgin right now. I think we could see high 15s, maybe even mid 15s on Virgin. We're rolling over on Stokes. The small caps got destroyed today. They were down nearly 3%. SPY's down nearly 3.5%. Dow Jones, 2.7%. Let's take a look at the weekly charts and how we're poised to close out the week, and then we'll do some chart requests. As we always do, I want to begin with bonds. And we've had a big reversal this week on bonds. I mean, last week we broke down below weekly support. This week we are rallying. We're just off the highs of the week. We even put in a new weekly high. Now, no chart out there is more important to me than this one. And if we close out Friday, remember, we have one trading day left to go. A lot can happen. But this chart that I'm going to bring up next is always Monday off. That's right. Got me. That's right. I'll probably make that mistake 2 or 3 more times between now and the end of this video. Got me. Okay. The 10-year yield. This chart speaks volumes. I mean, if we close out the week this week down below this support level here, or even this upper band of what should have been support, I mean, my God. That's a major breakdown on yields. I have no words to put to it. 1 day left to go in the week. Let's see how we close out the week. If we get a big rally tomorrow and we manage to close back above this support level, I will be buying the banks hand over fist. So more to come on that trade. So this chart here is the Pimp Mac Daddy. And remember, the Pimp Mac Daddy of all economic data is coming out tomorrow. Non-farm payrolls. The tips. Not a good week. They're up, but a Big reversal week. We're well off the highs. And that's with the yields declining. The dollar, this is a monthly chart. I'm going to drill down to a weekly chart, but it's important to point out that at current, we're attempting to recapture what was support, which we broke last month. They're trying to recapture it now. Daily chart. This is the proximate reason why you're seeing, weekly chart, I should say. This is the reason why we're seeing weakness in commodities. Weekly chart, big bullish reversal bar here on the dollar. Big bullish reversal bar. Daily chart. We closed. Oh, this is the second. This chart's wrong. This hasn't been updated yet. I was wondering why this looked the way it did. I knew we didn't close at the highs of the day on the dollar. This hasn't updated yet. Let's use the UUP. Note on the UUP how we faded on the day, right? We were up, we closed up, but we faded on the day. So tomorrow I'm going to be interested to see the price action on the dollar and whether or not it can hold its gains. Right now it's under pressure. But if it does hold gains and rallies, that's a problem for commodities. The VIX, monster week. But we saw it coming. S&P 500 up here. The market sent us signals. Excuse me, folks. So we haven't broken out above resistance quite yet. Right there, we were above it. We faded a little bit, but what a powerful day, week. Out of curiosity, let's take a look at how we look on the day. I will point out this, is that we are trading well above the third standard deviation Bollinger Band. So we can spike up, but I would expect a fade on the VIX and a rally in the S&P 500. Albeit, however, short-lived. But I do believe it's going to be a shallow correction. And the leadership that comes out of this new rally will not be the same leadership. It's not going to be Tesla. It's not going to be Apple. It's going to be your old stodgy names taking us to the finish line, which is the election. After the election, it all depends upon policy. The president does not have to worry about getting reelected. I'll put it to you this way, that I do believe that the president is a patriot. And if he does want to do the right thing, which I do believe he wants to do the right thing, it won't be market friendly, unfortunately. What it will require is for the federal government and for state governments to get smaller. That means less employment. It means less power for the public sector unions, which is great. They have way too much power. Government spending must get reined in. That will not bode well for the economy. We are starving for a new round of stimulus, and you're seeing what's doing right now to the market. Yes, it's overbought, but this is a reaction of a lack of a deal in Washington. So if policy, knowing the president, as I do, and I have met the guy during a book signing, shook his hand many years ago, but I have always been a fan, and I've studied his book, I've read all of his books. I know the guy to a certain extent, and the right thing is not going to be the best thing for the stock market. So I think that it's going to be a trader's market. The post-election way to trade this market is going to be a stock picker's type way of doing things, not indexes. And it's going to be a trading market. It's going to be extremely volatile. I don't think the volatility is going to drop down anytime soon. I think it's here to stay for quite some time. Let's go on. I got off onto the tirade. Transports down on the week, but they're holding the breakout point, folks. What we need to see are names like Boeing, which did not do well today. In fact, very, very bearish. I'm going to go to that chart in a moment. The Dow Jones Industrials held the breakout from last week. We did not break down. The S&P 500 did not even touch the lows of the breakout point. The reason why I just laughed, I'm reading in a headline on Zero Hedge earlier, and the headline is this, and I had to laugh. Stock market wipes out all of September gains. It's only the 3rd. I just thought it was funny that they would think to publish that. You know, if it was the 31st or the 30th, I don't know how many days in September. 30 days, is it? Yeah, 30 days in September. Always use that little rhyme. IWM, horrible, horrible, horrible. Took out last week's lows, horrible. The banks holding support. We're going to remain long. If yields push down lower, I'm going to get concerned about the banks. But right now, I'm a little bit more optimistic than pessimistic. Technology, I think it's done. Stick a fork in it. Semis, done. And the semis have been telling us for the past several weeks they're tired. Inside weeks, filled candlesticks. Now we have a bearish key reversal week, assuming that we close down on the week. Hell, maybe we'll close at the highs of the week tomorrow. One trading day left to go. But we were warning for quite some time now about the trend of volume on the semis, the SMH. And the volume trend has been down. Today, we spiked right through it to the downside. And one trading day left to go. Biotech. We got stopped out of biotech last week. Thank God we did. Because it looks as though it's going lower. Energy broke support today. That does not bode well for the market. You need energy. The president needs energy. Healthcare, where we're seeing inflation down. I'm not counting this out yet. I'm still bullish on it. Longer term, as an inflation play, short term, you need to avoid it. We'll revisit it. Oil. It broke support yesterday. Let's go to a daily chart. And this was a kind of a tell. You don't want to see oil breaking down. And it did yesterday. It was down again today. It did rally off the lows of the day. But generally, as goes oil, so goes the energy sector. Emerging markets, bearish reversal week. I'm still bullish on them. Longer term. Gold. Let's update this chart. Gold under a tremendous amount of pressure. These are the support and resistance levels to watch. I will point this out. Take note of Stokes. They're trying to hook up, or flatten out, I should say. So I'm not ruling gold out just yet, especially with yields dropping. I'm definitely not ruling gold out. The threat right now to the price of gold is a rallying U.S. dollar, but we've seen in the past, recent past no less, where they've correlated. They've traded in tandem. So I'm not all that worried about a rallying U.S. dollar. I think ultimately the dollar is going down, especially if yields continue down lower. Gold is the place to be. Silver is the place to be. Gold miners, of which we are long. Do I have a chart up here? Yes. Gold miners did pretty good today. At one point, I think they even went positive. Let me confirm that. At least the GDXJ did. And take note of your Stokes. These are the little signals that the market's sending us that, you know what? And I did look what happened the last time I made this observation. We hooked up higher. Watch for W formation on Stoke RSI. Let's drill down to a daily chart. We are long of the GDXJ for disclosure purposes. And take note of the price action yesterday and today. Yesterday we rallied off the lows of the day. We didn't go buying more. Why? We couldn't close positive. On a bullish reversal bar, I would have bought more. Today, same type of candlestick. We rallied off the lows of the day. They just couldn't push it positive. We didn't go adding more. If they did turn it positive and close it positive, I would have bought more. So I'm looking for a reason to buy more. I'm not panicking at all. As long as we hold support here, I'm good. A rally up and through 61.51 has us very, very bullish on the GDXJ, the GDX, whatever you want to trade. Just be careful of the leveraged ETFs. Silver, not so good of a week. It's broken support here on the week. We're just off the lows. I have a silver position. I'm not worried about it. It's extremely volatile. It's extremely volatile. When I see a chart like this, I step back and I ask myself, is the reason why you entered the trade, has it changed? Has your thesis changed? Well, why did I enter the trade? Well, we're in debt. We're adding more debt. The dollar's a flawed currency. We have a government that's out of control. They can't stop spending. Why would I want to sell gold and silver? It's the place to be. So hard money is the place to be. So while, yes, silver is having a rough week, longer term, it's going a lot higher. But I wouldn't go buying it right now. Uranium, we're long of uranium, holding support. Bad week, but it's holding support. We're profitable. We'll stay long of it. Consumer discretionary, very, very overbought. Weekly basis. To me, this rally just never made sense. Now it's paying the piper. I think there's a lot further to go to the downside here on consumer discretionary. When might it turn around? If they pass a stimulus bill, it should turn around, at least to get, rarely an absent a geopolitical event like COVID, the market's tanked, right? Straight down. Absent a geopolitical event, what's going to happen, the normal way that you get a top is you'll get one of these. What's a good example? I don't have a good example here. But what you'll get is a high, a pullback. Let's say it pulls back to support at 145. We bounce around there. Everybody gets excited again. More news comes out about the president's going to do this and they're going to come to a deal that. And all of a sudden, we rally back. The question at that point in time, as we rally back, is this. Do we break out or do we put in a lower high? And just because we put in a lower high doesn't mean that we're going to correct and fail. Unless, of course, we break down to new lower lows. That is your confirmation breakdown. Lower high, and then a breakdown to new lower lows. We're not there yet. And we don't have the geopolitical event to take us there yet. Hopefully, it doesn't happen. Consumer staples. They became extended, but due for a rest. They're going lower. They got overbought. What are consumer staples doing trading up and into the third standard deviation Bollinger Band? This is just far too much optimism out there in the market. And that optimism is going to get reined in. And it could be brutal if this rally continues on into Tuesday. I didn't say Monday. I said Tuesday. Okay, let's take some chart requests. Let me see what I have in the members area. Tommy, AGQ. I already went over AGQ. Tommy Fiverr. That's a good one to go over. All right. Let's go over to my house of alerts. And our friends over at TrendSpider. Folks, if you're not familiar with TrendSpider, they sponsor us. We are partners with them. They are integrated with our two of our levels, silver and gold. You get it free when you join up. And if you appreciate the value of automated technical analysis, as I do, then you will appreciate what they have to offer. So I'm going to throw up my plug here. 35% discount code below. Use that link to go to their website. Use the discount code CON35. And I want to bring up the S&P 500 first, and I want to show you seasonality. I know we can get more years on. We can go back to 1993 on seasonality. So this takes us back 28 years on seasonality for the spiders. The month of August, we're up 64%, but September, we dropped down to 54%. That spikes up in the month of October to 67%. Now I want to bring up the DIA, the Dow Jones Industrial Average, going back 23 years. September, we're up 48% of the time, but then we spike back up in October to close up 68% of the time. So what we may see here is quite possibly a down month or a month where we just barely eke out a gain. But I think that as we proceed into the election, we're going to see a very, very big rally. And again, while they may spike the Qs again, I think they're going to take the Dow Jones to new all-time highs. Now, one of the names that they dropped out of, I was in shock. FactMac checked me on this too. I was told this. I didn't read it. They dropped ExxonMobil out of the Dow Jones Industrial Average. It was only, 10 years ago. This is the largest cap company in the world. They kept Chevron. But I like ExxonMobil down here. And to show you why I like ExxonMobil, it's for two reasons. One, it's a dogs of the Dow play. If you're not familiar with that, look it up, because I think it will do well next year. And what if it doesn't do well? I like it because if it gets down to my price level, at current it's yielding 8.9%. If it goes down to my price level, I'm going to have a 10 yielder. So our alerts are set here, watching ExxonMobil with bated breath. I would not buy it now. Anthony, it's true. They're out, huh? Okay. I can't believe they did that. Shocking. Shocking. All right, let's go to Tommy's Fiverr. This is a good company. Monthly chart. We're down on the month. Not a lot of data here. Weekly chart was still up on the week. You want to see it hold the lows. I think it will. Let's use a daily chart to identify an entry point. Not a bad day. It was a good day today. A little bit of a volume shelf above here. Right at the highs of the day. You get a breakout above 119.43 and we close there, most importantly, it's a buy. I like it. Fiverr, good stock. Let's see how we closed. 4-hour chart. A little bit of a fade. Wait for the breakout. I think that you will be rewarded. All right, what else do we have? Boeing. BA. Okay. I want to get back into Boeing. We sold it at 204. Nice profit. We haven't been in it since. We've been using the 179.41 mark as an entry point and another entry point at 189.86. Thus far this week, we are down right at support. I think I have an alert. This is the one that fired off today. Where's my alert? It fired off today. Here we go. 3 hours ago, Boeing hit support. All right, let's drill down into this. Yep, there it is. So I had it set up for a weekly time frame. We're right there. Let's see how we closed out the day. It was not wonderful. Right down into support. I mean, how I would trade this one is if they gap it down tomorrow and then they manage to flash a bullish key reversal and close it back above, let's call it 169.30, I'm in. I would get in at that price point and on that price action because, again, I believe that the mega cap, Dow names, those are going to be the names that are going to come back to life, especially if we get a good jobs number tomorrow. Those are the names that are going to come back to life. So, fingers crossed. Hopefully we see that price action. I can't buy it just yet. I need to see a bullish reversal bar, and we don't have one yet. We have quite the opposite. A ton of resistance above, and hopefully some support below. So I would wait. The market's going to send us a signal. HTLB. Is this it? HTLB. HTL versus Bitcoin? I don't think that's right. Can you please confirm that, RL? Because that symbol's not coming up. Let's go to HD. RL, if you confirm that symbol, I'll try to get in there. All right. Yes, please hit the like button, please. Thank you very much. Eric, how you doing, buddy? Yeah, I got it for you. No problem. All right. What was I just going to type in? We'll go with HD. Yep. I still like it. You know, yeah, we're pulling back. We're going to do a retest of the breakout point. Probably some more downside here to about 273 weekly chart. We did break. This is a problem. This is a breakout point failure. All right, so we gapped up, closed there, faded on the week of August the 17th. Rallied last week, faded, but still held support. This week, failure to hold not one support level, but at current, 2 support levels, 1 trading day left to go. So maybe it'll rally back. All right, so here's the problem. First, I want to overlay weekly trend lines. All right, so what I just illustrated on top of a daily chart is weekly support and resistance levels. And you can see on a daily basis, all the damage was done today. Are we done going down? Well, I'll bet you a nickel they're going to try to rally it back tomorrow morning in an effort to try to recapture the support level. If they fail to recapture and close above this blue line here, which should be weekly support, then we're coming down here. At around 264, give or take a buck. I don't like these Stokes. These Stokes are weak and getting weaker. When you have, for those that are not familiar, when you have your slow stochastics trading down below 50 and declining, I say this constantly, members probably want to shoot me. Rallies tend to fade. Rallies tend to fade. So if you get an up day in the morning, there's a very, very good possibility that it's going to fade by the end of the business day. That's why you want to wait until as late in the day as possible. If we get a rally back tomorrow and you want to buy because we've recaptured support, you want to wait until 3:59 and 55 seconds before you press that market order button. Make sure it closes back above that support level so that you don't have some big institutional sellers dumping shares into the close. Rallies tend to fade when Stokes are down below 50 and declining. That's a problem here. I can't hammer that home enough. That's HD. EVFM. Oh, we've gone over this one before. Let's take the automated trend lines off. Are you folks getting an echo at all? I think I fixed it, but I just want to make sure. On the audio? Is the audio clear? All right, so good. Oh, good. Thanks, Franklin. Thanks, Tommy. Thanks, Denny. It was like several days when I went on a live stream. It was horrible audio, and I went in there. I spent like 2 hours trying to figure it out. So thank you guys, appreciate it. You don't want to hear my singing, a baritone. Okay, so EVFM above resistance, but we're in such a heavy area of volume, overhead supply, right up all the way through $5.86. We're sitting right now with a two handle. You got to really believe in this company. Weekly chart looks better. But just keep in mind, you have your 20 period moving average here, which is acting as a declining ceiling. No big deal. It's flattening out. RSI is looking good. Moving up. Stokes flattened out. Hooking up now. Yeah, you can see, I was eyeballing prior support levels, and it just so happens that it nearly coincides with where the highs of the week are. So that's your first test of where your overhead supply is. I think that if we close out the week above let's call it 347 per share, and we get a retest next week and it holds, you could buy it. I would just use a tight stop. I wouldn't add more. This is a total nibble trade. Nibble on strength. Nibble. Buy a little, scratch the itch, get it out of the way, add more on a close above 3.87, and then as time goes by, we'll revisit. Once we get above 4.59, you could add more, but nibble. Good day today. Relative to the rest of the market, outperformer. Relative strength. Good stuff. Doji formation on the day. You got to give it credit. So it's a stock that, yes, while it has a lot of overhead supply, it's showing early stage signs of strength and recovery. But it's going to be a long, unless they come out with some crazy headline and the phase 2 or 3 trial drugs. I'm not good with that stuff. But absent some sort of a big headline news like that, it's going to be a long road to recovery here. So nibble. Cat, which is the best risk-reward short tech or long Dow stocks? Short tech or long Dow stocks? Oh. What's your time frame? I'm buying time right now. That's why I'm asking you questions. So if you think that, wow, he's asking me questions to buy time, you're right. It's a good question. You're stumping me. I need to let my wheels spin a little bit. So while I'm waiting, I'm going to go over a couple more symbols. KC AC? Wow, when did this come public? What do I need to use? A 4-minute chart? It's overbought. What is this, a joke? How do I do technical analysis on this? It's overbought. It just went public. Guys are messing with me. It's overbought. Avoid. Let it pull back to 1722. But it's overbought relative to its third standard deviation Bollinger Band. I would not go chasing it. Okay, so Cat is adding more information. Too early to tell. I'm thinking if tech opens up, short it. I think that if the data comes out, if there's a big beat on the headline number, because that's all really the street cares about. They don't care about anything else except for the headline. You're going to see yields spike. That will not bode well for tech. Because if you have job growth, this is the way I'm perceiving it in my head right now. If you have job growth, well then that the work from home trade comes under threat. So I'm thinking that yields will rally in anticipation of reopening. People are hiring more. People go to the office. I'm extrapolating out a little bit here in terms of other economic data that we've seen of late, which has been pretty positive. Manufacturing data came out very positive. So I wouldn't short tech on a continuation breakdown. I would short tech. Let's just bring up the XLY. What is this? Why is this not coming up? XLK. Nope, rolling. I'm having a brain fart. Pardon my language, ladies. Yeah, XLK. Okay, good. How would I trade it? The only way to trade the XLK as a short, to me anyway, is on a rally tomorrow morning and then a fade. And the price points that I'd be looking at are here at $122.90 thereabouts, $123.50. And here's a real attractive one, a rally up and into 124.81. Watch for a fade off of those levels. And then I would short it. But I don't think that this is going to be the big short to make big bucks on. I think that you can only scalp to the short side right now. Do I have a favorite name to short? The other day it was Tesla and Apple. I wouldn't short them anymore. It's a hard question. A Dow name? I don't know of one off the top of my head right now that I'd buy right here, right now. You're welcome, Cap. Good question. You stumped me. U.S. Navy in full force in China Sea and took over. Oliver, is that in the news? That didn't just happen, did it? Is that for real? Oh, boy. I'm not seeing anything here. Oliver, can you confirm that news story, please? U.S. Navy in full force in China Sea and took over China man-made sand islands. That would be a very big geopolitical event. Huge. Huge. All right. With that, folks, it's 7 a.m. or 7 o'clock on the dot. Thanks for joining. Smash the like button. Thanks for being here. I really appreciate it. Larry, sorry you couldn't join tonight, but thank you very much for the beautiful letter and the great shirts. I really appreciate it. Everybody have a great night. I'll talk to you tomorrow. Be well. Tommy, Ernesto, am I still going live Sunday? Yes. Oh, no. More to come. Because it doesn't make sense to go live on Sunday night. The futures will be open, but it doesn't really matter much because you have all day Monday. I'll probably go live Monday night. Monday night. That makes sense. Oliver, thanks for that. I'm going to check it out right now. If this news is for real, major geopolitical event, and I may even do a swing trading today, tomorrow morning, if in fact that's playing out. So check your email for an alert if I go live tomorrow morning. Please, Denny, you're welcome, pal. Everybody have a great night. Be well.